is a stock? Hi, my name is VJ and I want to help you get started with the stock market. Before we get started, you may be confused. There's a lot of numbers and charts and graphs and colors and what is all of this stuff? So let's simplify it before we get started. Let's explain this with a simple example. These two want to start a delivery company. And what they do is they split up the company 50-50 and they create 6 total shares and give each person 3 shares. And now in year 1, they're off to a great start and they earn $300 in profits. So with 6 shares, that means each share is worth at least $50 because there's $300 in assets in the company. In year 2, they do even better. They earn $600. 300 plus the 600 means they have 900 total assets. 6 shares means that each share is worth at least $150. And so the growth in the income led to growth in assets, which led to a growth in the share price. Stock price is based on company income and growth. Amazon. Has Amazon grown over the last 20 years? Yeah, if you weren't around 20 years ago, let me just tell you, it wasn't as big as it is today. This chart here shows the revenue in 2004 was $7 billion, not small, but in 2019 it was $280 billion. Look at this chart. It's incredible. And the stock price is also incredible. It's almost a mirror of that chart. It's gone from under $100 10 years ago to over $2,000, matching that growth. So what do you need to remember from all of this? Number 1, stock or shares, don't get overwhelmed by it. What it means is a piece of ownership of a company. The growth of that company leads to growth of the stock over the long term. Now, I want to emphasize long term. So often you'll hear, well, something happened in China, or so-and-so got elected, or interest rates, or this or that. And from day to day, a stock may go up or down, and it doesn't necessarily have anything to do with the immediate growth of that company. But in the long run, like you saw in that Amazon chart, there were some ups and downs. But when a company has $7 billion of revenue and goes to $280 billion, the stock is going to go up like that. Now it's your turn. Now that you're thinking about it, not stocks, but actual companies, think of one company that you love and use often. Is it likely that that company will grow in the future? That's it. Just ask yourself that. And next time we'll look at some real companies, look at their stocks, and try to understand why their stocks have gone up or down, and look at some of the numbers around the stocks now that you understand what a stock actually is. See you next time.